The news about Russia's military invasion of Ukraine continues to rule the markets. Traders and investors instantly react to all reports related to this issue. Oil, one of the world's most important sources of energy and a key tool of diplomatic pressure, is gaining value. After rising above the level of $100, oil prices jumped to $105 per barrel for the first time since 2014, but then entered a correction. Likewise, the asset kicked off Friday morning with gains. Given a tense political environment, the range of price fluctuations can be quite wide. Depending on the reaction of the world community to Russia's actions, the quote may either fall to $90 or head for the next local highs, rising up to $110 per barrel. Considering that global oil inventories are at a 7-year low and there are no output increases by OPEC Plus in the current situation, investors' fears are also mounting. Against this background, the most likely scenario of further dynamics in the oil market suggests growth. From a technical point of view, Brent crude futures jumped above $105 per barrel. Shortly after, the volume of long positions decreased. As a result, the asset corrected by about 7%. Nevertheless, the quote is still trading near the psychological mark of $100 per barrel. Despite its overbought status, high uncertainty in the markets and a tense political situation in the world may well lead to an extended rally in oil prices. The military invasion of Ukraine has a fairly strong impact on the value of the Russian currency. On Thursday, the ruble collapsed to 90 rubles per dollar. However, the Russian currency managed to recover to 83.90 rubles per dollar. This growth can be attributed to the Bank of Russia and its foreign exchange interventions. Oddly enough, the United States also contributed to a rise in the rate of the Russian ruble. Tough sanctions announced by the White House turned out to be not so tough. Many expected such restrictions as a swift shutdown and asset freezes, but they were not imposed. The US Treasury Department targeted a number of major banks and companies, but most of them said that the new sanctions would not cause significant damage to their businesses. Notably, the United Kingdom also announced fresh sanctions. Besides, European Union leaders agreed to slap the second package of sanctions against Russia. The latter may have a severe impact on the ruble. The EU restrictions have not yet been announced, and the markets are still awaiting. They are supposed to be harsh. However, it seems traders began to react to such statements much more calmly. In any case, it's difficult to predict the further movement of the dollar-ruble pair as volatility remains high. Thus, it can be assumed that today's dynamics of the dollar-ruble pair will depend solely on traders' reaction to the aggressive information flow. A price jump to the level of 90 rubles per dollar indicates high interest among speculators. At the same time, one cannot exclude new price fluctuations due to fundamental factors. Therefore, there is still no point in relying on technical indicators. The situation in Ukraine also influences the value of the yellow metal gold. On the first day of the Russian invasion, the main safe haven assets saw steep gains. Gold reached $1,973.70 per ounce, its highest intraday level since September 2020. Later on, the quote went down. This indicates that the metal's growth potential remains quite high. Any aggravation of the Russia-Ukraine conflict may lead to a new wave of growth in gold futures. In times of market volatility, investors tend to shift their focus to safe haven assets. Thus, gold showed on Thursday that it had not yet lost its investment allure. Following a jump in the value of gold to the level of $1,970 per ounce, the volume of long positions decreased sharply. This led to a technical correction of about 4%. Such strong price swings once again testify to the prevailing speculative mood among market players. Amid the ongoing uncertainty, gold may well resume its bullish run. And that's the forecast for the end of the week. We hope you will be able to stay calm and carry on with your trading routine despite high market volatility. May your trading be lucrative. See you back soon.